While everyone's debating whether we'll see a pullback before alt season, they're completely missing what's about to hit the markets this week. We're staring down the barrel of one of the most volatile weeks in months, and most traders have no idea what's coming. Wednesday alone could shake out the entire crypto market to its core. We've got the Treasury's quarterly refunding announcement, ADP employment data, GDP numbers, and the FOMC meeting all within hours of each other. Then, just when you think it's over, the Bank of Japan drops their rate decision in the early Asian session on Thursday. But that's not even the scary part. Friday brings us NFP, one of the most market-moving events of the month, followed by potential tariff deadlines that could send shockwaves through the global markets, all while we're getting earnings from Meta, Microsoft, Amazon, and Coinbase. So here's the thing. Not understanding what's happening this week is exactly what will cause traders to get absolutely wrecked. So I'm here to prepare you. In this video, I'll break down exactly what to expect, when to expect it, and most importantly, how to position yourself to profit from the chaos instead of becoming its victim. If you're new here, welcome. If you are returning, welcome back. I'm Annie and this is Trade Travel Chill. Be sure to hit that like button, hit subscribe if you're not already subscribed so that you can stay up to date with all my latest market analysis. Now, I'm going to get into the early week setup first. So we're having a look at the Bitcoin chart on the 1 hour time frame. Now, I'm going to get rid of all this mess in a second, but I just want to explain to you what is here currently. This was my analysis prior to the weekend to show you how everything played out. These levels here, part of the TBD system, they actually took 2 weeks to play out. So we had our level 1 drop through here. We had our retracement. Level 2 drop, which took Bitcoin down to about 115,800, had a retracement again, and then we had our level 3 drop into my target, which was discussed on this channel at about 115K. So that gave us this level 3 here. So technically that's complete, and these count as sideways drops. So they didn't dramatically reduce the price of Bitcoin, but they were high volume moves to the downside within this higher time frame range. And so now we have to assess what's going on now. So here's a habit that I have when the market closes on Fridays, because I want to understand what happens over the weekend and how the market makers set the trap for the weekend. So if we have a look at just the price action over the weekend, you can see here that I've got all these lines with these numbers on my charts. Now these lines are pulled from High Block, which show you the liquidation levels at each price point. And I apply this to my chart after the market closes on Friday because it shows me where the liquidity is over the weekend and it helps me to understand what's being taken out over the weekend. So you can see here, all these green lines right here, the price has come back to all of those green lines at this point in time. And that means that all this liquidity here has been taken. So I just quickly go through and delete all of those from my chart. And now what I want to do is I want to refresh those zones so I can see what new liquidity is being built up over the weekend, because you can see that we do have the typical weekend trap with the price just going sideways. So give me 1 second and I will reapply those. Okay, so with that reapplied, what you can see is that there's some pretty large levels still below price. What you're looking at is these numbers here that say 207 million. That means approximately if price were to come back there, it would wipe out $207 million worth of leverage. And we do have a big cluster still in my prior zone of liquidity. This comes from a higher time frame, and I've discussed this on the channel before. So really what I want to investigate in this video is whether or not I think we are coming down to this level. Above price, we also have a lot of liquidity, and that actually takes us up into my area of interest above price, anywhere from 118 all the way up to the top of the range here and even beyond it actually. But this is all short liquidity, right? So this is where current open short positions will be liquidated if the price returns there. So some of these ones that are super high up would be because they shorted this peak formation high. So in order to short this peak formation high, you would say that that is a pretty competent trader, right? Like they know what they're doing. So the chances of price reversing all the way back and liquidating these people is pretty low. Also, the fact that it's this blue color means they're 25x leverage. So they're not the 100x and the 50x degens. They would most likely close their trades before the price got all the way back here. And that same goes for these guys as well. It's these ones here that are orange and red. They're 50x and 100x degens. So they always become the first target. And then the pink below price is the 25x longs. So what we have right now is basically very bullish sentiment. We have people who have been longing the weekend range on high leverage. We can see that here with the orange line. We can see that here with the red line. And they're even longing on 25x. We can see that here with the pink line. So this is what we have to keep in mind, because the idea of weekend price action is to try to investigate who is the market maker going to come for when the market opens this week. And the question that you ask yourself is, what's the lowest hanging fruit? Like, where could they take price that would allow them to pick up large liquidity fast? So obviously this is the target, this 117,124 with 207 million there. It's the closest to the current price and it's 100x degens. So before we draw that conclusion though, I just want to zoom out because it's important that we have an idea of what's happening macro before we can draw a smaller time frame conclusion. So when we look at the daily time frame, you can see here I've marked out quite a few pockets that have super high liquidity, both above and below price. We worry first about the liquidity that is closest to the current price. So below price, our zone to look for potential retracements into is between about $111 to about $114,500. Now I like that zone for a potential retrace for a few reasons. It would line up with the daily time frame 50 EMA, which is an amazing support EMA. And in addition to that, if price did retrace into this zone, it would rebalance this high volume area here where price shot through previously when it broke the prior Bitcoin resistance. So within that vector, I want to know about the halfway point of it because that usually is where you see price return to. And so that level is about 114K. In addition to that, we can draw a fib on this whole move to see where that would put us. And that's at about 38. So anywhere between a 38 to 50 fib level, I think would be a really good retracement for Bitcoin. But again, being a daily time frame, it may take some time. 38 to 50 would wipe out all of this liquidity, would retest EMA, would recover this high volume vector candle. So providing we saw buyers show up there, obviously if we go down there, but if we go down there and we see buyers show up, this zone's going to be a really good buy the dip opportunity, providing we hold the level and don't break down any further below it. Okay, so if that's my conclusion, then I want to add some more evidence for me to believe that we are going to come down into this zone. And so that means I'm going to go to heat map orders to see where the current heat map orders are. Now, it may be a bit too early for those orders to be there right now because it is a fair way down. And also being the weekend, what you tend to see is, how do I say this? Basically like an orders that cause a squeeze. So let me explain that a bit better. See here, actually, let me show you on a smaller time frame. Okay, so this is the 1 hour time frame. What you're looking at on a chart like this, according to my personal settings, is the white lines above and below price, right? See how close they are to this current weekend range? That's a squeeze. What that means is that longs are holding price above 117,600 and shorts are holding price below 118,500. See how those orders are significant compared to the number either side? So you're looking at 575 in that white box, and then above and below that, see it drops to 100 or under. So that's the high level of orders waiting to short Bitcoin at 118,500, and then below price, these are only long orders. And see how you see 775, but then either side of that, it's also around 100 or lower. That's sitting at 117,600. So that is buy orders wanting to buy if Bitcoin goes down to 117,600. Now, because you have those high levels so close to the range above and below price, that's a squeeze. So eventually, when price makes its decision to move out of the range, it is highly likely that whatever direction it picks, it's either going to spike into that and fast reverse. So let me try and draw this as an example on a chart. Okay, so this is what it looks like, right? So the options that we have, because it's a squeeze, is you will either spike into this area and then reverse fast. And as that reversal happens, I'm not saying it's going to go that low, just that direction, okay? But as it reverses fast, these will get pulled, so they won't hold the level. That's one way a squeeze can happen. where it spikes up before down. It can also go the other way, right? So if we're going to squeeze the other side, the other traders, it would go like this. Or what could happen is that we just break right out of the range, and as price moves up fast towards these orders, they get pulled and we just go for it. Again, can also happen the other way, where price will drop fast, these orders will get pulled at the last moment. Because you have to remember, they're both just limit orders, right? So it's like when you go and place a trade on an exchange, you put in the price you want to enter, your stop loss, your take profit, but before your entry gets triggered, at any time you can go and cancel that position. So that's exactly what these are. These are just people with a lot more money than us placing their limit orders that they have every right to cancel at any point in time. They do it to manipulate us, but essentially that's what is happening. So then how do we know which one? It's very difficult to know which one on a Sunday. Very difficult. So that means you just go back and look at the model so far and how you personally are counting your levels. So when I zoom out, it was a difficult week for sure for trading. Personally, I didn't trade really. I don't think I traded at all this week if I think about it, because I knew it was going to be sideways price action. That doesn't interest me. But I can see my 3 levels, which this one belongs here. And I can see a pretty clean W formation within my zone of liquidity that I pointed out prior. So that's a reversal pattern, right? So following a W, the pattern goes like this. You get your W formation that leads into rise 1, retracement, rise 2, retracement, rise 3. Then you get a reversal and you get 3 levels of drop, and then you get trapped into the weekend. So if something like that was to play out and we're looking at this W here, and then we think that this might be it, then we've got a W, a rise, and this is retracement or consolidation. Consolidation is lining up with the weekend. That's what makes it tricky. But if we're to follow that pattern just as it is, this should break out to the upside. It really depends on what happens when it gets to one of these 2 zones, which is something I can only live trade with my community at the time, or my team can. It's not something I can preempt, or really any trader can preempt, because the false move week beginning, it's a trade you have to react to when the price gives you a certain trigger. It's really not something you can predict. You can get some help by understanding where the liquidity is and understanding the pattern, but it can still get you. And look, this is the hardest trade of the week to get, is the false move week beginning. Most traders will stay out of it and they trade from Tuesday onwards. We're a little bit degen on this channel, so we do try to catch it if we can understand it. But this is a price squeeze, and so it does tell me something big is coming. And when I add to that, looking at the open interest here, see how the open interest is really flat? It's really low. This means that the market maker is going to have to induce traders into a position. He needs market participants. Look at the volume over the weekend. Absolutely dead. Open interest, absolutely dead. So how the market maker induces traders into a position is by making an initial fast move. And that means I think the fast move is going to spike into one of these 2 orders. And that's where you look for your next move. Now, this could get triggered by early week news events, because on Monday, 3 p.m. New York, we've got Treasury QRA estimates. On Tuesday, we have JOLTS, and we also have consumer confidence. So it's possible that whatever way we break out for the false move that starts the week, Tuesday may change that trend. So definitely keep an eye out on that. And then on Wednesday, we have midweek chaos. We have the triple threat. We've got the full QRA, 8:30 a.m. New York, ADP employment, Q1 GDP first release, then we've got FOMC, and then Wednesday night, so Thursday morning, we have the Bank of Japan decision. So chaos is the moral of the story. But when I look at the open interest and the low volume, I have a feeling that the market maker is going to have to give a fake out before choosing the direction. Look, it really is worth watching my last video if you haven't watched it, because I did go into a lot of detail about the summer lull that people talk about and how Bitcoin might range for a long time now. But essentially what that did was that just widened the range, which is also normal if we're sort of heading into a little bit of a correction. But then it came back up and it closed back within the range. And since then we've just been consolidating and, it's making up its mind about what to do. So is this bearish or bullish? At the moment, this consolidation is a lower high on the 4-hour time frame. So that may signal that more of a correction is coming, and I'd be looking around this 114K next. which lines up with the 4-hour 200 EMA, but really this whole zone of liquidity would be a target as well, just depending on how bearish things might get. Whether we go up first before we come down for it, that's the part I'm not 100% sure of, because if you look at these candles right now, they are literally all dojis, and dojis mean indecisions. And that's because of market timing and the fact that it's currently Sunday, and we expect any time from now into Monday there to be a false move that liquidates traders before the real trend that starts the week begins. So then, whilst Bitcoin goes sideways, it's usually a really good time for alts to move, but that means we have to look at Bitcoin dominance. Also on my last video, I mentioned that I would like to see Bitcoin dominance to come back to this range and create a lower high. We can see it hasn't done that, but I also mentioned that it may also just reject the 200 EMA because it was under it at that point in time. That seems to be what it's done at this point in time, which actually makes it even more bearish. If Bitcoin's ranging and the dominance is bearish, that is your explanation as to why your good altcoins, not all of them, but your good altcoins are fairly bullish. Now, on the altcoin note, I'm going to talk about Ethereum in particular. Actually, a lot of them are also showing a little bit of a double top too. So just be a bit careful, because if Bitcoin does correct at the beginning of the week and your altcoins are currently showing topping out patterns, they may correct as well. Even if they look good during the weekend, it may be a sign of a little bit of a correction. Nothing to worry about. A nice, well-needed correction actually would be great. The total minus stables and Bitcoin, again, this has the potential to build a flag similar to this, right? So we have this breakout, we've had this retracement, but it's only back to the 20 EMA. It's not a deep retracement. So that has me thinking that it's probably in the process of building some kind of a flag, but that's going to take time to play out. And also being a daily time frame, I would like to not believe at this point in time that this is a breakout and this is the retest, because it's a retest for ants and we kind of want more than that, right? So I'm hoping that this is making its way back to create a second touch to a trend line, you know, something like this. And then we just sort of do this until it eventually breaks out again. And that would line up with the idea of the summer lull, because this is the daily time frame. So that would take time for all of that to happen. So yeah, I'm hoping this isn't a breakout, retest, take off. I would like to see this complete as a flag, then take off. Gives us more time to get into things. So all good, you know, if we're lucky enough for that to happen. Now, if this technical analysis is making your head spin, or if you're looking at these charts thinking, I wish I could read markets like that, then I've got something that might interest you. You see, the ability to anticipate these market moves is not magic. It's a systematic approach. And that's exactly what we teach inside the TBD system at Trade Travel Chill. This isn't your typical buy the dip strategy or basic trading course. We're talking about understanding market maker patterns and avoiding retail traps, and trading with the precision that comes from years of refinement. Our TBD system combines the best of Forex trading strategies with approaches that's specifically tailored for crypto's unique volatility. And here's what makes it different. You get ongoing support from our pro traders in our Discord community, literally round-the-clock guidance, daily market updates, and live sessions that adapt to whatever the market throws at us. Whether you're the type who learns best independently with our economy class membership, or you want hands-on support with our first class membership that includes live trading sessions, custom indicators, and even mindset coaching, we've designed this to get you trading confidently and profitably as fast as possible. The goal isn't to make you dependent on us forever. It's to give you the skills to read these markets independently while staying connected to a community of traders who actually know what they're doing. You can check out all the features and see which membership fits your style at tradetravelchill.club. To make it easier for you, the link is in the description of this video. But right now, let's talk about what's coming in the second half of this week, because this is where things get really interesting. On Thursday, we have PCE data. That's at about 8:30 a.m. New York time. We have weekly unemployment claims, and we have Meta, Microsoft, and Hood earnings that they come in after the market closes. On Friday is the grand finale. We have NFP 8:30 a.m. New York. That's the big one. ISM manufacturing PMI, that is 10 a.m. New York. We have Amazon, MicroStrategy earnings all after close. And we also potentially have the tariff deadline implications. It's hectic. And so what I want to do is I want to have a look actually at Ethereum because, it seems to be leading the market with altcoin trading. And I really in particular want to talk about my prior analysis that might actually not play out. And so let me give you a quick recap. I'm on ETH BTC. My prior analysis was that the price came exactly to my significant daily level, which is a 0.032. That is where we started to see this little bit of a pullback. And I was hoping that that pullback would take us into this area of interest down here before taking off to give us this level 3 rise. Now, what's happened since then is that we held the 10 EMA on the daily time frame, which is extremely bullish, and we're now repeating the level. So this sort of invalidates my idea that we're going to pull back here. Although I will say I'm still open to it at this current point of time because we've returned there on a weekend. And so you don't really tend to trust weekend price action. So what I'm saying is that if we end up closing above this level, then this level 2 rise is not finished yet. And it may mean that we're going to go up into my other area of interest, which is somewhere around the significant weekly level. But let's just say this whole range between 0.034 to 0.037. We may be going up there before the level 2 rise actually completes. And if that does happen, we would have to reassess where a pullback after that might come because this will no longer happen. It would be too deep of a retracement. So I won't do that now because this move hasn't finished. But I just wanted to put it out to you that there is a chance that this prior analysis is going to be invalidated if price breaks above and holds above this level right here. Now, when you go to the 4-hour time frame, there is a possibility that we shouldn't give up on this level yet. And that is because it's literally right at that level right now. So if this was going to create an M formation, which would be the beginning that leads to that retracement, then what we'd be trying to watch for now is a 4-hour time frame signal of bears stepping in. Could be something like a bearish engulfing. That would be a really good signal that, this level is going to hold as resistance for now, and that area of interest is still valid. So I just wanted to point this out to you because it's 50-50 at the time of filming this video. So for closes above, disregard this area of interest. If we see the bear step in and we start to see ETH BTC head down a little bit now, this area of interest may still be valid. There's plenty of time for it to get there. So I'll definitely do follow-up updates to let you know what happened. But I just wanted to give you something to keep an eye on in the meantime and to not bank on this area of interest happening if the price does end up breaking above this resistance right here. So then that allows me to go and have a look at ETH USDT. And that means that there's a chance that my prior idea, which was down here, of a retracement, something like this, may not happen because maybe ETH USDT is heading up to the key resistance at 4,073. That's possible at this point in time. And it's also possible that this level 2 is not finished yet. So if, again, ETH USDT breaks this prior high right here, then we have to wait and see where is it going to before the bears step in and we start to see some weakness. If it does go up to that level, I'll reassess at the time where my area of interest is. It's most likely that this green vector will remain the area of interest, but potentially not the blue one. So I may readjust it to that. But this is something that I will do with you when I see the weakness step in. For now, I just wanted to let you know that it may not be happening yet, but there is still a possibility of it happening because this is weekend price action that is repeating the level. And also, besides all the news events this week, we've got a pretty key timing because we're heading into the end of the month. So the end of the month can also lead to profit taking. It can lead to rebalancing for big money, but it also can lead to the ideal pivot trading opportunity. So we've got lots of events this week that might cause a trend change, but also we have the end of the month on top of that, giving us really, really good potential opportunities. So speaking of taking advantage of these trading opportunities, let me tell you about an insane deal that's exclusive to Trade Trouble Chill community. If you're going to be trading through this volatile week, you'll need to be on an exchange that won't eat you alive with fees. That's where Weeks comes in, and they've given us an absolutely ridiculous offer that I've never seen anywhere else. First off, when you sign up using the exclusive link in the description of this video, you immediately get VIP 2 trading status. That's a 25% discount on all your trading fees for life, not for a month, not for a year, for life. Most people have to trade hundreds of thousands of dollars to reach VIP 2 status, but you get it instantly just for being a fan of the channel. And here's where it gets crazy. For a limited time, they're also offering this 20% deposit bonus. That means if you were to deposit $100, you would get $20 extra, or $500 gets $100, $1,000 gets $200, and $2,000 gets a $400 bonus. That's free money just for funding your account. Think about it. You're getting lower fees forever and bonus money up front. During a week like this, where we could see massive moves in both directions, every percentage point in fees matters. Every extra dollar in your account gives you more flexibility to manage positions. Now, this deal is exclusive to Trade Travel Chill fans, and honestly, I don't know how long they'll keep this offer available, but you can get the deals and sign up using the link in the description of this video. Just look for weeks. That's how you know you're signing up for this deal. Now, with your trading setup optimized, let's talk about how to actually position yourself for this week's news events. If you understand the trading strategy that we teach on this channel, then you know there's one thing that can completely disturb the natural flow of the typical pattern that we trade, and that is economic news events. So here's what most traders don't realize. News events don't just cause volatility. They're often used as a perfect excuse to spike price in a direction specifically designed to liquidate traders or trap them into bad trades. The market makers know exactly when retail traders are most vulnerable, and they use these high impact news days to their advantage. Sometimes high news events weeks like this can be absolutely incredible for day trading, but only if the patterns are crystal clear and you can read what's actually happening beneath the surface noise. The TBD system we teach gives you that clarity because it focuses on market structure, not just reacting to headlines. But here's the crucial part. Other times, when the charts aren't making sense and the patterns are getting chopped up by conflicting news flow, it's best to either sit out or completely monitor the volatility for higher timeframe setups with much looser stops. Now, I can't stress this enough. If it feels confusing, you don't understand what the charts are telling you, it's perfectly okay to sit this week out. Just let all the news events play out, let the dust settle, and then get back to regular trading once the storm passes. There's no shame in preserving capital during chaos. The market will always be there tomorrow, next week, next month. Your trading account might not be if you force trades during these periods of maximum confusion. I mean, let's put crypto aside for a moment and let's just actually have a look at the S&P and NASDAQ right now. Now, this is heading into a significant week, okay? So have a look at this. Back in December until Feb, we had this level of resistance here, right? We hit it 3 times and then we had a pretty big retracement, bounced, returned to the level, and we've broken through it. Now, ever since we've broken through it, we have not even retested that level. The S&P just keeps creeping up and up and up. And with such a volatile week that we have potentially coming up, it's possible that the S&P does come back to give the retest sometime this week. Even if you have a look at NASDAQ, it's the same story. Significant level here, December through Feb, decent correction, came back to repeat the level, broke through it, and it hasn't actually retested it yet. When I look at the daily candles, however, they are showing potential weakness. Whether that leads to a retracement this week, I'm not sure. I do think one is coming at some point. Would still be bullish on it because we're well and truly above the 50 EMA on the daily, but the point of me telling you these is that if these do come back for their retracements, the NASDAQ and the S&P, that also may cause a bit of a correction in the crypto market. Like I said, would be a welcome correction if we got it. We are in the best position for that to happen this week with all the news events and with the end of month. But that's not a guarantee that it will. Keep your eyes out for it, however, because if it does happen, you're sharp, you're ahead of it, and you're going to be able to take full advantage of it.